We are starting off with a look at the latest news from the financial sector. In a move that has caught the attention of investors, ace investor Madhusudan Kaila's family has trimmed its stake in technology solutions provider Rashi Peripherals. According to the company's latest shareholding pattern filed with the NSE, Madhuri Madhusudan Kaila, wife of Madhusudan Kaila, reduced her holding by more than 4.45 lakh shares during the quarter. This reduction brings her stake in the company down from 2.44% to 1.76%. Rashi Peripherals has been on a tear, with its stock price rallying over 140% in 2026 and nearly 200% over the past year. The company recently reported a 62% year-on-year rise in revenue to rupees 5,102 crore during the April-June quarter of FY27, while net profit jumped 70% year-over-year to rupees 104.6 crore. Meanwhile, in other news, DBS Group Holdings has reported a 15% increase in its second quarter net profit, driven by growth in its wealth management and cash management businesses. The bank's net profit rose to Singapore dollars 1.82 billion, US dollars 1.33 billion in the quarter ended June, up from Singapore dollars 1.58 billion a year earlier. We're also keeping an eye on the latest developments in the global economy as central banks around the world continue to grapple with inflation and interest rates. The U.S. Federal Reserve has hinted at further rate hikes, while the European Central Bank has taken a more dovish stance. As investors, it's essential to stay informed about these developments and how they may impact your portfolio. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of electric vehicles and autonomous technology, where Tesla has been making headlines with its latest earnings report. The company's revenue growth of 26% may seem impressive, but investors are more focused on the automotive gross margin, which fell short of expectations at 16.9%. This has sparked a debate about whether Tesla's investments in full self-driving, or FSD, robotaxi, and Optimus will ultimately pay off. On one hand, Bank of America has maintained its $460 price target for Tesla despite cutting its 2026 EPS estimate by approximately 17%. This suggests that the bank is confident in Tesla's long-term vision and its ability to commercialize these technologies. On the other hand, some investors are skeptical about the company's ability to generate significant profits from these investments, especially given the intense competition in the EV market. It's worth noting that Tesla's competitive landscape is unique, with companies like BYD, Rivian, and Lucid Group focusing on different aspects of the EV industry. While BYD is winning investors over with its manufacturing scale and aggressive pricing, Rivian is working to improve its production efficiency and reduce cash burn. Meanwhile, Lucid Group is focused on scaling production without putting additional pressure on its balance sheet. As we look at the short interest and hedge fund holdings, it's clear that Tesla is viewed differently from its peers. With a short interest of just 2% of float compared to 12.39% for Rivian and 40.30% for Lucid Group, it seems that investors are more bullish on Tesla's prospects. However, the company's hedge fund holdings did decline sequentially in Q1 2026, with 123 hedge funds reporting ownership of the stock, down from 137 in Q4 2025. Ultimately, the question on everyone's mind is whether Tesla's investments in autonomous technology and robotics will pay off. Will the company be able to stabilize its automotive margins, improve free cash flow, and generate meaningful commercial traction from FSD and robotaxi? These are the metrics that will determine whether Tesla's next phase of growth lives up to the market's expectations. As we continue to navigate the complex world of electric vehicles and autonomous technology, it's essential to stay informed and adapt to changing market conditions. Welcome back to the Riskwiser Zone. From Facebook to Google, these giants are investing heavily in artificial intelligence, and it's changing the game. But what exactly is a hyperscaler, and how do they impact our daily lives? Let's start with the basics. A hyperscaler is a company that operates at an enormous scale, with data centers all over the world. These data centers are the backbone of our digital infrastructure, housing servers, storage, and networking gear that power everything from social media to online banking. The largest hyperscalers include Amazon, Microsoft, Google, Facebook, and Apple, and they are responsible for storing and processing vast amounts of data every day. But what is driving this investment in hyperscale technology? The answer lies in artificial intelligence. As AI becomes increasingly important in our daily lives, the demand for powerful computing and storage is skyrocketing. Hyperscalers are at the forefront of this trend, building massive data centers to support the development and deployment of AI models. These data centers are truly enormous, with some covering millions of square feet and consuming gigawatts of power. The largest hyperscale data center in the world is currently being built in Ohio, with a planned capacity of over 1 gigawatt. To put that in perspective, that's enough power to supply approximately 750,000 homes. But as impressive as these statistics are, there are also concerns about the environmental impact of these massive data centers. The production and disposal of AI-related hardware such as graphics processing units and memory chips can have significant environmental consequences. Additionally, the energy consumption of these data centers is contributing to greenhouse gas emissions and climate change. So what does this mean for investors? As the demand for hyperscale technology continues to grow, companies that specialize in this area are likely to see significant returns on investment. However, it's essential to consider the potential risks associated with this trend, including environmental concerns and the potential for regulatory backlash. In conclusion, the world of hyperscalers is complex and multifaceted, with both opportunities and challenges for investors. As we move forward in this rapidly evolving landscape, it's crucial to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.